If we were to compare our investments to a car, one of the best investment vehicles would be a Toyota Camry or a Honda Accord. Boring? Yeah, probably. But it gets the job done with minimal expenses and is the most dependable in the eyes of many consumers. But the fact being that Toyota Camry or that Honda Accord may be the most reliable vehicle, it's surely going to require some maintaining from time to time. And in the worst case scenario, it may be a situation of which it may cost you some unexpected expenses, may cost you a little bit of money. But the same is true for the best passively managed index mutual fund portfolio. Every now and again, you'll need to change your oil, so to speak, when those original investments start to take losses or they just no longer match your investment strategy. And when we have to sell off or buy stocks or bonds in order to ensure that our investment strategy is still met, that is what we call rebalancing. And that's what we're going to be going over in this video. What's going on, everyone? My name is Trey and welcome to Let's Talk Finances. If you're serious about your finances and you're ready to take it to the next level so that you can build generational wealth, go ahead and subscribe to this channel now, and don't forget to like this video if you deem the quality and content to be fitting of so. Why is rebalancing a portfolio so important? Well, I'm glad you asked. The best portfolios are diversified across multiple asset classes such as stocks, bonds, cash, etc., etc. And when you start building this portfolio with these different asset classes, you'll do so with a specific asset allocation in mind. So for an example, let's say that you've determined through a little bit of research that the ideal asset allocation for your portfolio is 70% stocks and 30% bonds. Some people will ask, well, how do you determine those figures? We're going to go over it a little bit here in this video, but just say that the blanket rule of thumb is to take your age and subtract it by 110. That number that you have left over would be the percentage of stocks that you should be invested in. And the number that's left over after that would be the percentage of bonds that you're invested in. But just hang on there with me. I promise you I'm going to explain in detail as we progress through this video. So the next question being, how do I rebalance my portfolio? Which is probably the most commonly asked question, and understandably so. But allow me to make it easier for you. You can do so in 3 steps, and we're going to go over all of them. The first step being review your ideal asset allocation. Number 2, determine your current asset allocation. And number 3, buy and sell shares to meet your desired asset allocation. Let's go ahead and go over number 1, reviewing your ideal asset allocation. Now, Vanguard has one of the best tools in helping you meet that asset allocation, and that is an 11-question test. And at the end of this, which I took, it said that my ideal asset allocation was about 80% stocks, 20% bonds. Now, someone of my age, you can consider that to be a little bit of an aggressive investment strategy, or let's say asset allocation strategy. But for me, some of those questions differed from an individual that is my age, and that's why it boosted me up a little bit. But let's say your answers to those questions align you with a little bit more of a conservative strategy, then you would probably take on a 50% stock, 50% bond allocation. But in reviewing what your ideal asset allocation would be, there's a lot more that goes into play than just subtracting your age from 110. Ideally, you want to come to these figures by aligning your investment horizon, which means the time that you have to retirement, your risk tolerance, which means how much risk can you actually stomach from the market, and then lastly, your investment strategy. So that means whether you want to be conservative in your investments or whether you want to be more aggressive. All 3 of these are what's going to pretty much make up your asset allocation, all right? So now that we know what our asset allocation is, let's jump in to number 2. But before we do so, don't forget to subscribe and like this video if you feel that it's helping you in reaching your investment goals. Number 2, determine your current asset allocation. I put links in the description below for some apps that you can utilize that will help build that asset allocation for you, or should I say help you determine what your current asset allocation is. But I'll do you another solid and give you an example of what one might actually look like. So here you go right here. It'll give you a screenshot. Now, most brokers or brokers accounts will show you what your current asset allocation is. So if you look at the example here, it'll show you here exactly 80% stock, 20% bonds. Two of the best apps I would recommend you utilizing are number one, Personal Capital, and then number two, Future Advisors. So they're totally free, they don't cost you, and it doesn't pay me for recommending these. I just think they're good, solid apps that you can utilize that'll help show you and track your current asset allocation. Now you have an understanding as to what you want your current ideal asset allocation to be, but now you also know what your current asset allocation is. So the next step here is going to be explaining exactly what a balanced portfolio is supposed to look like. Now, from investor to investor, that's going to look a little bit different depending upon each individual investment strategy. But for the sake of brevity, let me give you a little bit of an example to help you understand how exactly you might buy and sell stocks or bonds to help meet your ideal asset allocation. So in the example here, let's say that you have $10,000 to invest with. That's been broken down $5,000 into a total stock market index fund and another $5,000 in a total bond market index fund. So you have $10,000 invested, which makes up 100% of your portfolio. It's 50% stock, 50% bond, which is very conservative, right? But let's say you want to switch over to 80% stock, 20% bonds with the same $10,000. How do we do this? Well, first you'll need to sell $3,000 of your bond and then buy another $3,000 of your total stock market index fund. After you do so, you'll have $8,000 in the total stock market index fund and then $2,000 in the total bond market index fund. Now, this still brings the total of your overall investment to $10,000, which is 100% of your portfolio. So if you see what we did there, it just involves a little bit of simple math, but the key aspect being understanding what your current asset allocation is versus what your ideal asset allocation is. So in this example, we went from a 50% stock, 50% bond allocation, which was our current allocation, and we switched it over to a 80% stock, 20% bond allocation, which was the ideal allocation. And in doing so, we have now rebalanced our portfolio. I know you're probably thinking, hey, there's got to be a little bit more that goes into play with this. And in certain instances, it may, considering whether you have more funds or less funds. But for the most part, the ideal in theory is exactly that. You're going to buy and sell certain stocks or bonds to switch from your current asset allocation over to your ideal asset allocation. Now, the next question is going to be, when do I need to rebalance my portfolio, or how frequently do I need to do so? Well, this can be answered in two different methods. The first method being you can do it on a time intervaled strategy, meaning you can say, hey, every year I'm going to rebalance my portfolio, let's say every 6 months. Or you might even say, I'm just going to do it one time annually. Both of those will work perfectly fine so long as it matches your investment strategy. The second way you can do so is doing it as needed, which means you have to actually look at your portfolio more frequently, which there's nothing wrong with that. So let's just say, for an example, right? You log into your investment portfolio today and then you see, hey, I'm supposed to be 80% in stocks. However, I'm 92% in stocks. Let me go ahead and sell off some of that so I can rebalance it to 80% stocks, 20% bonds. There's absolutely nothing wrong in doing so. And hypothetically, there's nothing wrong with looking at it every 6 months to a year. But the key thing to notate here is you never want to be more than 5% off of whatever your target asset allocation is. So if my target asset allocation for stocks is 80%, but if it went up to 86%, I want to go ahead and rebalance that as needed throughout the year so that it doesn't impact my risk tolerance. So if my risk tolerance is low, 5% is too much for me to stomach, all right? So you want to ensure that you're reviewing your portfolio from time to time to ensure you don't go over that 5% threshold. But at the end of the day, we all should look at our portfolio and gather just a few pieces of key detailed information. One of those things being, if you're talking about rebalancing your retirement portfolio for an IRA or a 401k, which you should do from time to time, but it's not as necessary considering you have a long-term horizon ahead of you. So if you have 15 to 25 years of investing left, then it's not going to make that large of an impact, because taking a loss in the first year isn't going to make that much of a difference versus someone who only has 5 years left to invest, if that makes sense. So if it's a retirement account, it's not that pivotal. However, you do want to ensure that you're still monitoring your account. But for those who are in a taxable account, it's a little bit more pivotal, simply due to the ability to utilize some strategies. And what I mean by that is, if you're invested in a taxable account, you might want to rebalance that portfolio before the end of the calendar year. And the reason for that is that you can actually sell off some of your losing stocks so that you can do something called tax loss harvesting. Now, without going into further detail, it's just some tax implications that you can utilize to help mitigate those fees, or should I say taxes, which I'll go over in a separate video. And there you have it, guys, in a nutshell, how to rebalance your investment portfolio. Those of you who found this video to be helpful, please consider subscribing to my channel, as it will help it grow so that I can continue making videos just like this one. And then lastly, don't forget to smash that like button for the YouTube algorithm, as that is what is going to recommend videos like this to you so that you can reach your target investment goals. Until the next video, let's talk finances then.